Welcome to the Investment Banking Leaders Podcast, the only podcast dedicated to helping the investment banking community grow through learning from other successful leaders. So whether you're interested in learning about investment banking, or you're an analyst or associate looking for advice on career progression and succeeding in the industry, or if you're a VP or senior that's passionate about leadership, you'll take something away from this week's episode. My name is Pete Nieberg, Global Head at Outram, and my mission is to connect as many of you with successful investment banking leaders as possible. So thanks for joining me and enjoy the episode. I'm excited to introduce today's guest, Charles Godbout, Partner and Managing Director at PwC in Montreal, Canada. Charles has over 20 years experience in the investment banking industry with a deep understanding of M&A, divestitures, debt and equity raises, LBOs and MBOs, among other things. He spent his whole career at PwC, so certainly understands a thing or two about loyalty, growth and development. Charles has advised on many successful transactions, and his breadth of knowledge will ensure he can provide us with a lot of insight today. On top of this, he's a great guy who really wants to give back to the investment banking community and help you all grow. So he was a perfect choice for today's episode. So welcome to the Investment Banking Leaders Podcast, Charles, and thank you so much for joining me.
Thanks for having me, Peter. Happy to be here.
Excellent. Hey, let's start just with you introducing PwC and what you do for your clients to the audience today.
Yeah, happy to. So PwC, I think most people are familiar with PwC, global professional service firm. Probably our biggest advantage is our global footprint. So we like to say we are 1 degree of separation away from anyone that matters. And so we have M&A focused individuals like myself in every geography worldwide, which has translated into, I think, probably the biggest platform, M&A platform worldwide. So we are regularly at the top of the league table in terms of number of deals. We specialize in mid-market, so mid-market can take various form depending on the geography, but you know, in Canada, we like to think of mid-market as 50 to 250 million in enterprise value. So our client base is primarily privately owned businesses, founder-owned, family-owned, private equity-owned, and I would say most of what we do is on the sell side. So divestitures, majority stakes, minority stakes. Most of what we do tends to be on the sell side. So that's us in a nutshell.
Perfect. Thanks for the introduction. I think it's definitely going to help. And spending time speaking with successful leaders with longevity in the business, I'm always intrigued to know, how did you end up in investment banking?
Yeah, so I'm going to try not to make this too long. Mine is a story about failed due diligence. And so, I moved from Canada, where I did my undergrad, to London to pursue a master's at LSE. And at that point, I had envisioned myself doing development type work. And so I was very focused on emerging countries and what were the best policies to help create wealth. And I was thinking about mixing my business background with this master's in I guess, poli-sci. Not realizing at the time that Canadians were overrepresented in most large organizations. And so my attempts at getting hired coming out of my master's at LSE were met with refusals. And so I accidentally bumped into somebody I knew who, a friend of mine who was actually moving to London, and he put in a good word about me with the managing director at the time in Montreal. And so we basically swapped place. He came to London and I went back to Montreal. And, I was hired by someone who I became friends with along the years. And, I told him initially, well, I'll take the job, thank you, but I'll be there for 2 years. And then in 2 years, I'm moving to Asia where I want to pursue some development work. And well, 20 years later, that plan is not exactly materialized, but it came sort of from a weird angle. But in the end, I'm happy that I found my calling almost by accident. And so, every path leads to where you want to land.
Good friends, and maybe accidental, but if you found your calling, then that's always special, right?
That's right.
And before we get into the real crux of today's discussion, why don't you tell us something unknown, something unexpected about you that the listeners can dial into?
Something unknown. Well, I guess, my first language is French. And so, I work and live in Montreal where I was born and raised. And so I guess maybe in, Montrealers and Quebecers in general, we tend to have a little bit more of a Latin blood, and we certainly enjoy a good time. And so I'm known for basically dressing up in costumes every time I get a chance. And so my basement is filled with costumes from various eras, starting going back to college. So
Wow.
that might be one thing that people would not know about me.
My brother has quite the hat collection for a similar reason. All right, well, that was definitely unexpected. So thanks for sharing that. Let's jump in a little bit to deal success. Deal making is critical to long-term success in investment banking, as we all know. Having closed so many successful deals in your career, what are the keys to success in your opinion?
Keys to success. I would say probably in order to get a deal done, I find that, there has to be a certain humility to it. And what I mean is people that try to win on every front and win at all costs will not be very successful in the long run, because you come across as abrasive and not willing to compromise. So a negotiation is a series of compromises where both parties tend to, not be 100% unhappy or happy at the end. And so probably I think my experience has been when I strike meaningful relationships and people perceive me as honest, and trying to pursue a win-win type of outcome. That's generally what happens at the end of the day. We find that happy medium place where everybody wins and everybody's happy to move on. So that's probably one key ingredient.
So honesty and humility and meeting everyone where they should be to create that win-win makes sense. And maybe for someone newer to investment banking who obviously who's involved in supporting the deal, what advice do you have for them when starting out to really support those deals to help be more successful?
Just, I guess, generally speaking, I would say be genuine and create meaningful relationships. And, I think one of this exercise is interesting for me because it's a look back on 20 years of M&A. And, I've been as guilty as anyone of at one point or another being arrogant and meeting somebody and thinking, well, who are they and what do they bring to the table, and overlooking who they are. And in the end, maybe they weren't important in your eyes, but what they were doing was important to them. And it's come back and bitten me in the back a few times where, I was too arrogant to realize that this person was, probably heading in a certain direction where I could actually help them, and eventually they could help me. And so, one of the things that I find, with the passing of time is I try to give everybody a fair chance, and I try to put my best foot forward and build, a meaningful relationship. And building a meaningful relationship often means helping before asking for something. And so I used to say, and when I was introduced to people, well, I'm not retiring anytime soon. I've got 20 years in front of me. So, we'll have time at some point in time. And before I retire, I'll ask you for something. So now I'm a little longer, a little further ahead in my career. So maybe there's not 20 more years of this. Maybe there is, I don't know. But I still have that same discourse. Life is short, but life is also, if you play the long game, then, you're likely to recoup your investment further down the road.
I like that. And many of the leaders who have been on the podcast talk about the importance of networking for a long-term career and a success in the industry. What's your take on that?
Yeah, networking is, obviously it's an important thing. I guess I don't like the term networking. There's something about it that for me just, speaks of, trying to get something out of people. Whereas, that's why I always refer to as meaningful relationships. And, you cannot have a successful career in M&A if you don't network, if you don't build relationships. And the key there for me has been, identify who will move the needle for you down the road. And sometimes it means investing in a relationship with somebody who at first glance may not be, someone who will bring anything to you in the short term, but, they have the potential. Either they're building a business or they're an upcoming professional lawyer or part of a PE firm, but you can see the talent, and you can tell that they're passionate and they will be in the industry for a very long time. So people like that are important. I mean, they will do something meaningful, and if you invest in that relationship at the onset, they remember it. And so networking is essential in what we do. You just got to do it with the mindset that you have to give first and ask second.
I love that mentality. Help first, give first, ask second, and be humble enough to build relationships at all levels. I guess over a longer period, you get really good at identifying those who will move the needle. And probably early in your career, analyst, associate role, it might be a lot more difficult to do that. Any tips there on how to really try and identify those characters that will move the needle, both internally, but also externally on the client side as well?
I think it goes back to what I was saying, where, at the time I think back to some arrogance I had, and, this person is not important. And that's a mistake. You never know. And if you give them a fair shot, you may be pleasantly surprised. Then there's a methodology, because it's easy to meet people and then not follow up. And the methodology is probably, requires discipline. It requires, an investment, because as you try to sustain X number of relationships, there's only so many hours in a day. So you've got to find a way to do it that will not involve every time, a lunch or a dinner, because there's only so many lunches and dinners. So there's other ways to sustain relationships. And, when you listen to what people have on their mind, sometimes you'll come across in, newspaper article or an announcement of some sort, and you flip it to them, and you say, "Hey, this made me think of you." Well, that's sustaining a relationship, and so it takes discipline, it takes investment, and I think it takes goodwill. Like you need to have the attitude that you're doing it for the right reason, and it will that investment will reap its rewards somewhere along the line.
I love that. And are there tools that you use? Again, lunch, dinner, not possible for everyone, but you want to keep that relationship going. Are you the type of guy that picks up the phone? Is it email? Is it LinkedIn? How do you keep meeting on the right level for the follow-ups that you mentioned?
It's a mix of everything. There's, social events where you will see, 50 people at once. And some people, may not necessarily warrant a full hour and a half dinner, but if you're doing those events and you have 40 conversations throughout the evening, you may be able to connect with these 40 people, and that might move the needle. So you got to think in terms of the broader events where you will encounter a broad spectrum of people that you want to maintain relationships with. And then the other, as I mentioned, things like, I'm what I call a deal junkie. Like I follow M&A activity. Whenever there's a deal that I find interesting, I'll try to flip it to somebody who may be interested by it. And one advantage that we have is people find us interesting. We bring something that's sexy to the table. And I work in a firm where we offer audit and tax services, and I tend to say we kind of bring the sexy service. We bring something that people are always interested in. So if you're coming to to somebody and you share with them an interesting piece of news, and you attach to it some intelligence, be it multiples or investment thesis or how many bidders were involved, it's, people find that interesting, and that just sustains a conversation. It's not a big investment. It doesn't take that long. But you just got to be disciplined and do it every day.
Nice. Thanks. That's great insight there. And I'm sure the listeners can latch onto that. Let's think a little about VPs. VPs are the nearest ones to taking that kind of step to the managing director role. What recommendations would you have for those VPs listening today to make that step successful?
Yeah, so I always bring up, I have coaches that are VPs, and I always bring up 5 points, some of which I've already touched on. So the meaningful relationship one, which I harp on, giving before asking, finding a way to be useful and showing goodwill is second. Third for me is play the long game. Don't think only in terms of who can, bring something to the table in the short run. But if you're a VP and you're intending on building a career in M&A, well, you've got most likely 20 years in front of you. So again, play the long game. Think in terms of who will grow alongside you, and either as a lawyer or as an investor, as an entrepreneur. And so playing the long game is important. Fourth, and this is in no order, but there is a value to building yourself a name within a certain niche. And so I always say, you're an expert in the last deal that you did. And so if you are successful at closing a deal in a specific niche, target, or industry, make sure that you advertise that deal and make sure that you learn what are the other targets, and you bring that intelligence back to them. And so as you're building a career, carving out those niches will be very important. You want to be known as the subject matter expert in, whatever it is. Of course, ideally, you would do it in sectors or industries that are going to have a tailwind for the short, medium, and long term. So for me personally, I looked at what the other MDs were doing, and where there was, in my opinion, white spots, white space for me to move in. And, telco was one, life science was another. And so I was lucky enough to close a number of deals in these 2 sectors, which translated into somewhat of a subject matter expertise. And now, our model is, geographic coverage more so than sector coverage, but I'm able to blend the two. So I'm bringing geographic coverage, namely the province of Quebec, with sector coverage, which I can take outside of Quebec. So if you're a VP, you've got to think in terms of, well, where are the white spots? Where are the white spaces? What areas are not being covered? What deals have we just closed, and where can I take that deal to? So that's an important one. And fifth, well, it's an easy and obvious one, but there's no substitute to working hard and being visible. That's the key to long-term success.
Love it. 5 key points, and thanks for sharing it so clearly. I've taken a ton of notes already from, insightful relationship, goodwill, play the long game, pick the vertical, the niche well, be the expert in the subject matter, and hard work as well, and visibility. So really great insight. Thanks, Charles. And a lot has been said to me by previous leaders about one of the hardest transitions being of that from analyst to associate. Do you agree with that? Do you see that as a tough transition for most of the bankers? I think that
statement probably is truer in bulge bracket banks than it is in firms like ours, where we blend the role a little bit between analyst and associate. I think that career progression happens much faster in organizations like ours versus the bulge bracket bank. So I'm going to pump our tires a little bit and say that, obviously I did 20 years with PwC, so I've done every step along the way, and I can see it. It was true then, it's true today. If you are passionate, if you are good at what you're doing, and if you are willing to put in the hard work, it can go really quickly. And I can't speak for what happens in bulge bracket banks, but I think what you're describing is certainly more applicable there than it is with us, where we have people growing very quickly into their role and making it to VP much faster than they would if they were in a bank.
Excellent. Okay. Point taken. In terms of your longevity with PwC, what's kept you at the firm so long?
Yeah, I ask myself that question a lot because I don't consider myself, I consider myself loyal, obviously, but I tend to have a low threshold for routine. And so, I would have expected to move from one job to another throughout my career, but probably it's probably, in fact, the fact that there isn't any routine in our work, the fact that every year, I like to say every year I do a new MBA. I come across new industries, new businesses, new entrepreneurs. I find not every success story is written the same way. So that's very interesting. There is not one recipe for success. And maybe, maybe another truth that nobody talks about, but luck has a lot to do with it. But so every year I'm confronted with all of these different scenarios or opportunities, and that, I guess, has kept me it's kept me engaged with the work. So that's the work itself. And then as for PwC, well, as I said, we start, when I started off, there was only, I don't know, 6 or 7 of us in our group. Today there's north of 25, I think. And so growth has been fun for us, it's been fun for me to be a part of. We grew our deal size. We grew a number of deals. We obviously grew our fees as a result. And, I saw the growth in the industry as well. When I started off 20 years ago, our biggest competitor was the no advisor. And every pitch started off with why they should have an advisor. Nowadays, that's not as true. Most people realize the role of a M&A advisor and the importance of it. And so it's the market got more sophisticated, and there's more transactions than there were 20 years ago. So again, speaking of growth, so all of these factors has, kept me engaged and interested. And just like anybody, there's a moment or two where you're pondering whether you're really going to continue in a certain direction. But every time something else brought me in, and whether a deal or a new opportunity, something that triggered some interest on my part, that has kept me going. And I can see myself doing this for another 15 years at least.
Your passion certainly comes through, Charles. It's refreshing. And I guess from being involved in an organization that's gone from 7 to 25 or so, you've probably had a big part in shaping the culture. Talk to me a little bit about that. What's the culture that you've generated?
Yeah, culture has been a very a big theme in the last few years, because when we went into lockdown mode during COVID, the biggest consequence was culture, and the lack of culture, in fact, or the disappearance of culture as people started working remotely. Our group has always had a very strong culture, built around fun first and foremost. You have to have fun. If you're going to be putting long hours, it's got to be fun. And loyalty, teamwork, respect, and those were all key values that generated very little or no turnover in our group for many, many, many years. And then COVID hit, and of course, people were working from their homes, and all of a sudden that attachment, that loyalty starts to fade, and you start looking right, start looking left. And so the biggest challenge coming out of COVID has been rebuilding that culture and making sure that people regain that sense of loyalty and appreciate, the opportunity that they have. Because I say this all the time, we're very, very fortunate to be doing what we're doing. And so, those are the key values, again: respect, fun, and provide people with a clear career path. I think that also helps when you tell them, here's what I see, for you in the short run, in the long run. You motivate people that way.
And I definitely agree with that. We have a similar thing at Outram. And when you're talking about career path, is that informally for you? Do you have something more formal in place? How do you go about that?
We have a group of partners that regularly, sit down individually with members of the team. It can be, coffee. It can be, here it could be a beer and grabbing a drink after work. We have a lot of these informal touch points in addition to a more formal and structured process to provide feedback and career advice. And the combination of the two, I think, works well.
Excellent. And are you still involved in the hiring process at this point?
I am, though I'm dangerous. So
You're the dangerous
yeah,
one when people come, the tough interview.
I'm a strong believer in hire slow, fire fast. But I mean, some of my hires have been notoriously bad. I really question my judgment. So what we did, and credit to our team of VPs in our practice, we totally changed the way we were approaching recruitment, and we really put in the hands of associates and VPs, where they've initiated a number of ways to put in some testing and really some good filters to bring to a set number of finalists that we partners will meet. And what we did as well is, we now have that final stage involving 8 to 10 people. So every candidate gets to meet a lot of the senior people in the group, so that you try to get rid of bias. And bias, you can see it everywhere. I mean, it's very easy to fall into a trap where you're, confirmation bias, etc. So having 8 to 10 people come at it from different background is helpful and hopefully getting rid of those biases. So the hiring process got so much better as a result, and my involvement really is at that final stage and one of many people that participate.
Thanks for sharing the insight. And what's you talked about the culture of fun, of honesty, of teamwork. What characteristics, traits are you looking for when sitting down with candidates?
Well, I learned that first and foremost, passion. If somebody, you can tell somebody who's already passionate about M&A, is already reading about deal activity, and the people that are passionate about M&A are those that are going to stick around for the longest and won't mind the long hours that come with the gig. And so passion for me is the number one. And if, in an interview, if I ask an innocent question, like talk to me about a deal that happened recently and why you found it interesting, and the answer is bland or there isn't an answer, then that's a red flag, because you're trying something that may or may not turn out to be for you, but you don't know. Whereas somebody who knows that they are interested in M&A and they read about it already, I mean, that passion will go a long way in terms of making them good professional. So that's one. And then obviously we talked about hard workers, but I find nowadays, everybody's hardworking, and I mean, the next generation is just more impressive than the previous one. And so, I go back to passion as the main trait that I'm personally looking for.
Yeah, you can't fake that. It shines through, and we look for similar things in our interviews, and it's a good yardstick for performance, right? If you're passionate about what you're doing. Talk a bit. We know the investment banking industry is demanding. There's no getting away from that. So, how do you manage culture effectively as a leader whilst considering, the demands of your clients and the demands of the business?
Well, one of the things that we try to do is get rid of the fake deadlines, because we can distinguish between what yes, it is a very demanding environment, but are we creating extra demands that aren't really there? Is the client really hell bent on getting XYZ deliverable, this Friday, or could it be, 10 days after? So there are certain things that we realized that we were doing just to show that we were hardworking, but maybe they weren't legitimate. Maybe they weren't needed. And so we're trying to find ways to eliminate the what I call the fake deadlines, the extra work that is not really going to add any value, but it's just for show. And so we've initiated also a policy whereby we go on a blackout from Friday, 6 to Sunday noon. where during which we don't send emails to our staff and demanding this or that. We try to let them have a break from us for that period of time. Of course, clients are, if clients are writing, we're responding. We're not closed for business, but we're trying to cut back on asking our staff to do things during that period of time and let them enjoy at least that time of the week, or the weekend, I should say. So there's different things that we're trying to do to balance it out better. But one thing that will never change, it's a deadline driven business, and it's clients first, and so that will never go away.
No, for sure, and I appreciate that, and I'm sure the blackout has a big impact on the team, and letting them recharge and come back for the next week ready to go. Having been in the business for 20 years, overall, how have you seen the culture of investment banking change over the years?
Generally speaking, it just got more sophisticated. You think about where the market was 20 years ago. There were twice as many public companies as there are today, which means that in the last 20 years, we've seen the growth of private equity change completely M&A processes. And the rise of private equity has been phenomenal for a number of reasons, but primarily it just means more deals. I mean, they're transactional beasts, buying and selling, and they've made everybody better. We've seen innovation around M&A that, you would not think that innovation was really possible, but then all of a sudden you see things like, reps and warranty insurance appear, or you see, vendor due diligence being integrated as part of an early stage process. Today, we're pushing more and more value creation and data analytics. Well before we take an asset to market, we're digging in and creating, value levers and investment thesis through that part of our business. So there's constantly innovation, and that to me is amazing, because it's the oldest. Well, it's not the oldest, but it's an old industry. But we still find ways to make it more interesting and better and more efficient. And so, if I compare it to 20 years ago, when I was sending teasers via fax, it's gone so much more efficient and so much more interesting as well, because the some of the more painful parts of the business, like the physical data room, for instance, I mean, that was brutal. And, some of those pain points have been completely eliminated or diminished. So it's a constantly evolving industry, and that's a great thing about it.
I love that. And we used to fax our designs, deal toy designs over, get marked up, fax back. So I definitely can, again, relate to that. The big chat, I guess, is around AI at the moment. So thinking about what you mentioned around innovation, what impact do you see AI having on investment?
I think everybody is, bringing AI into the lab right now and figuring out how it's going to be a part of our business. It will be. It will undoubtedly be. I don't think it will substitute itself for experience, but it will certainly take away certain aspects of the deal process that are probably too labor oriented. So examples, when we start building out the industry section in a sim, there probably is a big chunk of it that could be done through AI. Building buyers lists wouldn't surprise me if we got a first solid draft coming through via AI. Those tasks, I think, will be simplified through AI. There will always be, as I said, human intervention, but I think we're going to move to down the road seeing that we can be more efficient through the use of AI. But then, as I said, experience cannot be substituted. And what do you do when you get X number of offers in at different stage? And, there's no way AI can substitute itself for the feel that you have in a deal on certain buyers and your client and et cetera. So AI is there. It will support, but it will not replace us, is my take.
For sure. And I think there's so much more to learn and to know. And we're still really just feeling our way into that whole arena, I think. But like the feedback there. And whilst we still sit in culture, what's the area of culture you'd most like to see changed about investment
Well,
banking?
I don't know if it's not so much culture, but we have a challenge in attracting female talent. And we talk about it regularly internally. We talk about it with other stakeholders in the deal spectrum, and I'd like to see more female talent, frankly, that would be interested in a career in M&As. We have a hard time recruiting, and we have a hard time keeping female talent, and that's, I think, not a good sign of the times. We'd like to see a more balanced workforce between gender. So, and that's not a product. I don't know if it's a product of culture. I mean, the question should be asked. I think some of the inherent traits around M&A and investment banking maybe are not attractive to some female talent, and that's why they don't pursue a career in our field. But so we have to ask ourselves a question: why is that, and what can we do differently to attract and keep female talent?
Yeah, I agree. Still a lot of work to be done in that area, and we definitely want to see more female talent on board and at higher levels
That's right.
of the industry as well. Our podcast is international. You're the first guest from Canada in Series 1, and I'm really intrigued to know the differences that you see. So what are Canadian bankers' strengths, in your opinion?
It's probably the same strength that would apply in any smaller market. And so by virtue of the size of the Canadian economy, which is, for your listeners, call it the equivalent of California, right? Where the Canadian economy is the equivalent of California. So it's a market where, from an M&A standpoint, the consolidator or the buyer is often outside of our geography, most likely in the US, but also Europe, sometimes elsewhere. So a good Canadian M&A advisor needs to have a platform where they can reach those buyers. There's no way you can be successful if you don't have the reach. And so, and if you're not, I would say, familiar with, the intricacies of a cross-border transaction and what they entail, both from a culture and execution and et cetera. And so that probably is applicable to any smaller market in Europe, where deals are done on a cross-border basis. But certainly in Canada, that's true, both on the buy side and the sell side, for that matter.
And do you have advice for other Canadian bankers listening today about how to foster those cross-border relationships? I know we've touched a bit on it already, I guess, from earlier in the podcast, but any other advice?
I don't know if I have advice, because it's hard to do it on your own. It's not realistic, frankly, to do it on your own. If you don't have the platform, it is very hard. And because every time you're going to initiate a process, you're going to be initiating through cold calls. Whereas a platform like ours enables us to go through a warm lead. So I don't know if it's an advice. I think, maybe it's my experience, and I'm definitely biased. But working without a platform that has that kind of reach would be harder than having one.
Okay, perfect. Thanks. And I want to dive now. I think we've sat on particularly culture for a while. I'd like to talk a bit more about leadership, seeing as it's a leaders podcast. So if I asked your team about you, and I asked them how they would describe you as a leader, what would they say?
I'd like to think, and I don't know if it's accurate, but I'd like to think that I lead by example, by doing what I think are the right things. But I'm not, I'm definitely not an overbearing leader. I inherently trust people around me to be professional. And so I don't double check on individuals. I build trust, and I give people a lot of leeway in terms of responsibilities. So I empower people, and I really think that's in our industry, where we're fortunate to work with such smart individuals. You don't want to baby these individuals. Like, give them the ability to grow, give them the opportunities to grow, empower them. And not everybody will be successful in that kind of paradigm, but if most people will. And so I'd say those are probably the two traits: is I empower people, and I lead by example, hopefully.
Love that. Certainly the empowerment speaks to me a lot, and I know that's something we really focus on here at Outram as well. What's your thought on mentorship
We
for your
have
team?
at PwC a coaching program, so everybody has a coach. I've been the coach for a number of individuals, and I've had some very good coaches myself. I'm sure we're not unique in terms of having a program like that. I find that having these conversations, as coach and coachee is important. I also find that it's important not just to have one and really seek others' insight. And throughout my career, I try to do that. I try to basically sit down with different people and get their thoughts. And, sometimes you can get too comfortable with one person, and it might be time for a change and maybe make it a little bit more uncomfortable and get a different person as your coach. And so we call them coaches, not mentor, and a mentor, can come from outside your organization as well. So I think they're, not to say essential, but they're an important part of your career progression.
And what's your take on internal versus external coaches and the viewpoints they can bring to helping you grow and succeed?
The internal coach is more in tune with the inner dealings of the organization and the work you do. The external coach has a much, I would say, higher level type of view on the world, and I find that that's also a benefit because they can share with you their experience. And while it may not translate, for instance, they may not be coming from a professional service background, some of the lessons that they take from their own career may be applicable in your own environment. So, having a combination of the two just seems to make sense. And for me, it's always been, as I said earlier during our conversation, every year I'm lucky to work with successful people that have built tremendous businesses. And there's always something you can learn from them because it's never an easy path from inception to selling your business. There's always ups and downs, and how they go through the downs is very interesting to me. And so every engagement that we have, there's at some point or another a conversation around some of the hard times they've had and how do they pull through. There's something to learn from those experiences.
Yeah, no, I agree with you. And I think the variety really helps as well with growing your knowledge and helping you succeed. There's listeners here that will have work in smaller teams where mentorship is a big thing or coaching's a big thing, and there'll be listeners in large teams with not much formal coaching or mentorship. For those really looking to get more comfortable going out and finding mentors, whether it's internal or external, what would your advice be for them?
Look, being a mentor is a relationship of trust. And I think it's also an exercise in humility because you've got to ask for someone to mentor you. And so there's a certain level of humility required. And I would say probably find out who you have just natural mutual attraction. Attraction may not be the right term, but where you're able to cohabit in difficult conversations where you might get some hard truth about yourself. And so that takes a certain relationship. I've had people asking me, hey, not mentoring, but coaching, and maybe that conversation just didn't feel organic enough that it's, I didn't feel like it was going anywhere. Whereas with others, then it feels a lot more organic and sincere. So I think it's just with whom do you gel? With whom do you connect?
Yeah. Okay. And we got to be comfortable, I think, to get beneath, be vulnerable, and be able to really strip it back to improve. Let's talk a bit about recognition. Important part of leadership, and again, important part of culture, I'm sure as well. How do you recognize success in your team?
Success in our team. I recognize success in our team when an individual at a certain level starts to do the work of a level above that where they are. That means they've grown and exceeded their role, probably time for a promotion. And so for me, success can be measured in different ways. If we're measuring the success in one's career and their ability to get from one level to the next, that to me would be the the definition of success is somebody outgrowing their role. Of course, we measure success on a day-to-day basis by closing deals. That's what we do. So, and then it's interesting on every deal, the impact that each individual in the team had on the outcome. Like, how were they instrumental in getting the deal done? What was their contribution? What did they do that made a difference? And those, that type of debriefing exercise at the end is very, I'd say, insightful. I try to do it every time. I might not be as good as I want to be in that, but I try to be good at instilling a sort of a debrief over whether a meal, a drink, whatever, and what did we do right? What could have we done better? And those type of conversations.
Looking for the moments to celebrate the success and to discuss and give feedback. That's what I understood, and I think these are important elements.
Everybody wants feedback.
Yeah. Right. Yeah, for sure. And, again, you're a leader. We've talked a lot about that. We have leaders listening today and others aspiring to be the leaders of the future. So what's really helped you grow and develop as a leader outside of, the day-to-day work and acquiring that experience? What's really helped you grow?
Probably the opportunities I was given. I was lucky, as I said, to be part of a small group. And as a result, I was able to take on more and more responsibilities. And, everybody feels like a charlatan at the beginning. And I think it's good because you want to have that little insecurity. And I think we always keep that insecurity in ourselves. But, as you get more responsibilities thrown at you and you manage to do well with those responsibilities, I think your confidence grows. And with that confidence comes, the ability to lead others that are looking up to you. And so if you're moving from associate to VP and now you're leading one or two analyst associates on a file, then it's a responsibility and one that you hopefully take seriously. So for me, it's been opportunities given at every stage of my career to go a step further than I expected. And the circumstances can be very unique. For instance, I remember being on a transaction, and a rather large one for us at the time, and the senior person I was working with was pregnant and had to take a leave of absence early on due to her pregnancy. And all of a sudden, I became sort of the VP and the MD on the deal. At first there's insecurity, as I mentioned, but I managed to pull through, and that built my confidence quite a lot. And I said, well, you know what, I'm able to do it, and follow me, we'll get it done. So I think that for me, there's certain transactions like that I think were turning points for me, and where I acquired the confidence of basically overcame is imposter a word in English? Yeah, imposter syndrome,
right?
Yeah, where you overcome the imposter syndrome and, you say, well, you know what, I'm actually capable of doing this.
Love it. Sometimes you need to be out that comfort zone, right? And I think that's a clear example for you. So, hey, the investment banking industry is ever changing. I think that's a fair statement, right? Especially in the last 12 months or so, we've seen huge highs and some lows now as well, of course, particularly in M&A. For those, more junior in the industry looking to have longevity, what advice would you give them to be successful in that ever-changing environment?
I would say, we're fortunate because we have a very strong restructuring practice. So we have that natural hedge during cycles. And so I've lived through the cycle, in the early 2001, at the end of the Great Recession that we had. And every time we managed to pull through by doing restructuring work. And I guess my takeaway there was find a way to remain active. Even if the activity in the group slows down, you want to make sure that you stay active one way or another. And there's always a way to stay active, whether to call clients and say, why don't I do something pro bono for you for a couple of weeks? I'll take over your model. I'll clean it up. Just remain relevant and stay active. So we always had that hedge, and that helped me because I worked on a number of restructuring deals where I learned just as much I mean, they're not necessarily the type of environment that you want to work in all the time, but there's a lot to learn in those deals. So that probably would be my advice. Make sure to stay active and stay relevant.
I love that. And when you talk, what are you looking for from your junior team in those tougher times? When you say stay active, I see you're on the client side and out there and, maybe doing things for free or pro bono, as you mentioned, or whatever it takes to really strengthen that relationship. What are you really looking for from the junior members of your team?
Right now we're very busy. So this is not one such time, but at the onset of the pandemic from March to June 2020, everything went, basically on hold. And for that period of time, literally we went from super busy to, having absolutely nothing to do for a few months. So we challenged our team and basically we went out and looked at restructuring work. We looked at helping clients who may be going through hard times and need extra bench. We weren't sending invoices. We were doing it to build goodwill, and goodwill we built. And so we stayed relevant with clients and we stayed relevant within our own firm by helping out other practices and making sure that we weren't just a burden. And so those were 3 months that were very scary. And I'm sure that will resonate with a lot of people who are listening, because you just didn't know, was the world ending, and was this going to be a 3-5 year thing? We had no idea. Turns out it was a 3 months break, and then it roared back. But during those 3 months, it gave us a time to pause and ask ourselves, how can we stay relevant? How can we help out?
Okay, the perspective is important. Hey, looking back a bit on your career now. So if you could go back to Charles in the first few months of your career, knowing what you know now, what piece of advice would you give to yourself?
I don't know if piece of advice. I mean, I mentioned some of the advice, but I think one of the things that sometimes I think back to is in terms of academic background, and I'm obviously biased by working within a professional service firm that has a strong accounting background, but I don't have an accounting background, and I look at it as a very good base on which to build. I find a lot of the best talent that we have came through the audit and then went in transaction services and did due diligence and acquired some skills there. So that would probably, looking back, instead of picking finance, I think an accounting background would have been a good base on which to build. And then the other one, we asked that everybody has a professional designation, and 20 years ago, CFA was the big thing, and I was encouraged to go and seek my CFA title, which I did. But it brings very little value to me on a day-to-day basis. And so now I try to steer, the analysts and associates towards a CBV, for instance, and something that's more tangible in what we do on a day-to-day basis. So that's probably not exactly what you were asking, but in terms of if I had to do it again, I would probably come from accounting background, and I wouldn't go into the CFA. I would go more with the CBV type professional designation.
Understood. No, definitely answered the question how you see fit. So I like it. And I think, we are coming to the end now, believe it or not. The show, a few more minutes left to go, I'd say. So I'm going to start to wrap it up. For those listening who want to get more of Charles, how do they best connect with you?
You can reach out on LinkedIn. I believe my profile is also on the PwC website. Don't be shy. I love any and all conversation. Networking was a theme we discussed earlier. So by all means, reach out. I'll be happy to answer any and all questions.
And I'm a strong believer in successful leaders being readers, maybe not just books these days with the amount of resources and materials out there, but, is there something you recommend to the audience that's really had an impact?
It's funny because I try to discipline myself and not just read, books that are related to my work, because frankly, I find that you need a certain balance in life. And so I try to read outside of my professional interests. But saying that, right now I'm reading a book called When Mackenzie Comes to Town, which got a lot of press. I'm not going to place any judgment on what Mackenzie is doing specifically. But, one of the things that stands out in the book is the value of integrity and how quickly you can destroy your personal brand and the brand above the door. And that was advice. That was an advice that was given to me by my mentor 20 years ago. Your reputation there's two names that you need to protect: your own and the one above the door. And reading that book and how certain individuals impacted the McKinsey brand, is a reminder of that. You can destroy all of that intangible in a hurry. Not to say McKinsey has been destroyed. Not at all what I'm implying, but there are stories in there where that shows the risk of acting with no integrity and the ramifications it can have. So that's one book right now. And otherwise, all the classics that everybody knows about, the Barbarians at the Gate, Too Big to Fail. Those are all classics, and there's a lot to learn from those. One that I liked is M&A Titans, which tell good little stories around the pioneers of the M&A industry in the 70s and 80s. Some of the big brand names that we've heard about, but the stories are fantastic, and that's an easy read for those who would be interested.
Perfect. I'll connect with you and we'll get those listed out in the show notes so those listening can take a look if they want to, and some great suggestions. Is there anything before we wrap up for today we haven't asked you that you feel we should know at this point, Charles?
Maybe. I'm surprised you didn't ask what should we expect in the next 12 months?
Yeah, share.
I don't know.
What's your take on that?
The cycles seem to be shorter and shorter. I have this theory around this bubble of capital going around at all time, looking for return, looking for yield. This time, will not be any different. At one point, bid and ask will align, and I think we're going to see activity go back up in a major way. We just need to see some stability in some of the macro factors that we're all looking at, inflation, interest rates. But once the market acquires the confidence that we've stabilized and inflation will keep going down, interest will follow, then I think we're going to see M&A activity spike up. Strategics are still very active. It's harder for private equity to get done, but they're definitely looking at their own portcos and how they can improve. So I remain cautiously optimistic is, I guess, my conclusion.
Well, thanks for that insight. I know the leaders I've been speaking to in the space, I think the optimists feel like July and August, we're going to start to see some move after a slower start to the year, and the pessimists maybe towards the end of the year. Where do you land? We're recording this in May.
End
where
of
do you
the
land
year,
on that?
At least. I'm not. Yeah, I think it's going to take more than just going through the summer. But I hope I'm wrong.
Big
sure,
2024 either way, right? Okay, Charles. Well, look, I've really enjoyed chatting to you. Thanks so much for the time. I appreciate how busy you are with your schedule. So carving some out to speak with me and help our listeners is much appreciated. I'm excited to listen to it back. A ton of insights here, and I'm sure the listeners have taken a lot of way as well. So thanks so much for being here.
Cheers.
Cheers, Charles. You take care. Thanks for joining me today for the Investment Banking Leaders podcast. Today's episode was brought to you by Outram, the global leaders in commemorating your most important transactions with a meaningful deal toy. So if you have a successful deal to celebrate, hit me up or the Outram team at outram.com and get your cool design started. It was really fun chatting to Charles, and I'm confident his unexpected fact won't be beaten anytime soon. He shared a ton of great tips on how to succeed in the industry. I really loved his 5 keys to being a successful VP, but it's equally probably true of all roles. He said, build meaningful relationships, give before you ask for something, play the long game, build yourself a name, become the expert, and of course, hard work. Really resonated with me. I also loved his take on how IBD culture has changed, and despite being a really old industry, continues to innovate. He shared this variety and creativity continued to make the industry interesting as well as a fun place to work. His take on networking and how following up was the key to successful long-term relationships was also really meaningful for me. I hope you've enjoyed the episode, and I'm sure you have many takeaways as always. Join me again for the next discussion with another successful investment banking leader. You can find us as always where all great podcasts live. Please follow our page, share it with those interested, and until next time, best of luck with your transactions.